Morning and welcome to the trade setup right here on BloombergQuint Live. I'm Niraj Shah. It's an interesting day of trade simply because we are now approaching the weekend on the back of a very strong rally that we've seen in our markets and arguably the other markets too. And there's a lot of data points that one has to watch out for. Firstly, some important news flow. Yesterday, US the news report suggested that US is likely to halt Chinese airlines access in the United States of America. That led to the domestic airline stocks rising, but that notwithstanding, the larger point is this indicative or one more indication of the growing stress between US and China? I think that is something that everybody has to keep in mind if you're a global markets watcher. Oil is interesting because while it's gone up a little bit in late trade, it fell after Bloomberg News reported that the OPEC plus allies meeting was unlikely to happen this week, or issues of cheating of some of the other members, wherein they are not, according to Saudi Arabia and Russia, living up to their quotas. And therefore, oil had a fairly volatile last one session. It's above 40, and that's indicative of some confidence returning. But yesterday on this news that Bloomberg reported, came off a little bit. The US economic data, the data that was released by private agencies yesterday, services, etc., was better than anticipated. But remember, today is the big number that comes in on the unemployment front, and that is something that the market should be watching out for. But on the back of some indications of the data yesterday and the economy opening up, the US markets did reasonably okay for themselves. So they have gone up. And Nasdaq didn't do as well as the Dow and the S&P. So the tech shares are now actually underperforming the Dow and the S&P, but there were some upsides as well. We just try and get the chart going for you. But essentially, uh, the markets went up. Now, the key is, as a result of what's happening, look at this chart. It tells you a story, doesn't it? The global equities index, it's an index that is there on the Bloomberg terminal, is at the highest estimated PE ratio since early 2000. I mean, we are in a COVID world, and the global equities index price earnings is actually the highest in the last 2 decades. That tells you a story about how liquidity has driven the markets up already. For now, liquidity stays, and I'm not the one to argue against it. But it's a data point that all of us should keep in mind that the valuations are looking extremely expensive. Asia, though, is paying scant regard to valuations. The Asian markets, the little ones that I saw, the few ones that I saw, were trading reasonably okay, marginally in the green to in the green. And yeah, these are a couple of ones that we want to bring to you. There's Kospi, Hang Seng, etc., and all of them are doing okay. I mean, up to marginally lower. So mixed bag of sorts. The SGX Nifty indicates a start which is marginally in the green. So a very flattish start to the Asian screen and likely to the index as well. And therefore, it becomes difficult to say whether it will be a trending day today or whether it could be a day that could have a good session during the session. Though I must say it's not just me, right? If you just look at the monthly expiries on the call and the put side, you will see the wide range that is there right now, just showing how undecided the traders are. We're still at the start of the series. This will narrow down, but for now, the range is just unexpectedly wide. FIs though continue to put in money. 1,800 crores put it in trade yesterday as well. DIs chipped off some. But 3 days on a trot now, we've had a number northwards of 1,400 crores, even adjusted for their Gotak's selling. And therefore, that tells you a story, doesn't it? Results today: DLF, PI Industries, SRF, no index names, but each of these leaders in their own right. DLF on the real estate front. And yesterday, the Piyush Goyal message about what he's telling real estate companies to do has caught people, had made people be very wary about what could happen to real estate prices. But well, DLF is in a pond of its own. Let's wait and watch what happens there. Godrej Properties, remember, was up yesterday, but PI Industries and SRF, two stocks very close to their life highs, and therefore would be interesting. But the stocks that you have to monitor on open today. First one is BPCL, and the numbers leave a bit to be desired. Frankly, not the best of numbers. If you look at, I mean, that just the key takeaways or what the numbers are showing, you will see what I'm talking about. It's the biggest quarterly loss in nearly 8 years due to weak refining and marketing environment and inventory loss. The GRM's at 0.75 per barrel, the lowest at least since Q1 FY12. However, I just want to mark the point that Goldman Sachs is making in its note. They are saying that the core numbers were a beat on margins looking okay. Fuel retail trends will improve further in Q1 according to them, and they have a buy call on BPCL. They, of course, believe that there is HPCL having the highest sensitivity of fuel retailing margins. But despite these numbers, Goldman Sachs has a buy on BPCL. So that's the first one. I'm just reading out the note that Goldman Sachs has put out. Then Aurobindo Pharma, the numbers look okay. I thought revenues were at 6,100 crores versus estimates of 5,900 crores. Net profit 849 crores versus estimates of 700 crores. EBITDA at 1,342 crores versus 1,200 crores. So the numbers uh, good for Aurobindo Pharma. You have to bear that in mind that they've beaten estimates on almost all counts compared to what people had thought of. Yeah, I mean, most people believe, or most brokerages that at least I was reading, believe that the strong gross margins and ex-US sales, R&D EBITDA beat as well, augurs well for Aurobindo Pharma. So Credit Suisse, in their note, have said that while there are sharp increases in expenses, they're offset by benefits from the gross margins, etc., etc. I believe that largely Aurobindo Pharma numbers are a beat, and they would probably give in some clarifications once the conference call is over. So do watch out for Aurobindo Pharma too in the session today. I would watch out for HDFC Life. It's just offering of 4 crore shares in a block trade. But I think the stock corrected a bit in trade yesterday only. HDFC also sold off some shares yesterday, if I'm not wrong. But the Standard Life block is being offered at 490 to 501. So expect the stock to be in this range. Stocks, guys. I'll just end this piece with this one. Jindal Steel and Power. The May steel sales were up 26%, which were driven by exports. It's a very healthy number. It's better than what almost anybody anticipated. Remember, JSW Steel's performance also came out. But the point being, Jindal Steel and Power's numbers are impressive. Edelweiss has raised the volume targets as a result of this, and they've raised the target price to 155 per share. Morgan Stanley's maintained the target price at 140. The mood point is people are reasonably bullish on the metal stocks and steel stocks in particular. So do watch out for JSPL in the session today. That's about it. There's a lot of other stocks, of course, that will react. So happy trading and have a profitable day.